Well, thank you, ladies and gentlemen. Today's subject, as you know, is the platform market in Australia as it currently stands, and I thought we would deal with the elephant that's kind of been in the room for a large part of this year, and that is the manner in which there is so much competition for large planning groups by some of the major platform owners, and I can only assume that's to get plenty of flows onto those platforms. So Kelly, as one of the larger platform owners, I thought I'd start with you. And what's your take on the need for planners to be a part, the major part of the equation in terms of generating flows to platforms?
I think that definitely having access to that distribution and having that sort of distribution supporting your platform is an important part of obviously getting flows onto the platform, but also being able to continue to reinvest and ensure that your platform's relevant. I think equally though, a focus on end consumers is really important, and on accountants and on self-managed super funds. So I think what you'll see over time is that platforms are starting to adjust and evolve and starting to ensure that their value proposition cuts across different parts of the value chain. So in the immediate term, absolutely planners are driving all of the business onto platforms, and they're predominantly the ones that are making the decision to use platforms. But I think over time that dynamic will start to change.
Yes, I agree with that. I think that historically the intermediated market has been a very bundled market. It's been a little bit of all or nothing, where you have some of the insurance advice off to the side perhaps, but now I think the consumer is definitely taking more control over when, if, and how they use the planning sector and the intermediated market. But I don't think it's unique to financial services. I just think that we're seeing a disintermediated space, whether it's the publishing market or whether it's the financial services market.
I think certainly there is an inextricable link between platforms and advisors. I mean, the essence of a platform came about through providing a service, a back office service for advisors, and I think that link remains there today. But I think the gravitation of some of these dealer groups towards the platform providers, I think, is more about their need to have a broader set of services rather than just a platform.
Tony?
I think an interesting phenomenon is still platform choice in some of the larger groups. The perception of independence, we're seeing it from our perspective that larger dealer groups are still offering a choice of platforms. So not necessarily a wide array, but definitely one or two, which I think can help provide opportunities across in that big space. I think the other interesting one though is where we're getting advisors coming to us wanting to explore more of that. Can we provide more end user capability? Can the end user do more with the advisor being able to see that? So, I agree with Connie. I think that there's an interesting trend that's evolving, I think, over the medium term where end clients will do more in conjunction with the advisor, and I think platforms will need to have a think about how they adapt to that.
My observation is it's getting a bit messy, isn't it? You really start to see an industry that has historically focused itself as a B2B business model, suddenly realising that the party's over. And to keep fueling the party, it's best to get into bed with distributors and, in some respects, pay the money. Well, it seems to me that really great companies are born out of and driven on consumer needs. So I think the challenge for the industry in the platform market is to step back a bit and start promoting its value proposition to consumers about what it can do for them, and let the planning community work its own destiny out.
It's interesting, just bouncing off a lot that's actually been said, talking about some of the challenges, talking about FOFA. A lot of the planners, a lot of the dealer groups are really seeing platforms as an enabler and a helper come FOFA. So when we ask them what sort of things are you concerned about, or what sort of things can your platform potentially help you with, last year their concerns were simply, are clients actually going to opt in? This year, it's actually, how can I actually administer all of this thing, and very much looking to the platform providers to assist them with that opt-in. Off the back of that, to the point that was made earlier, they see the platform as the central hub, the administration vehicle for all of the centre of their business. And as the value proposition and as the level of satisfaction has been driven higher and higher, given the quantums of investments that have been made over the last year, about $130 130 million made across the major platforms, levels of satisfactions are increasing, and we're seeing consolidation, not only in the number of platforms when you aggregate it at an overall parent level, but consolidation in the number of platforms that an advisor is using. So go back a couple of years, 3 years, they were using sort of, around about 3.5 on average of platforms. It's now sort of 2 and a bit. So the value proposition's being delivered, they're availing themselves of those services, and driving satisfaction, and the level of satisfaction that's being delivered is being driven up.